Hi, everyone. Welcome back. Thank you so much for joining us tonight on this webinar. My name is Isaiah Rial, financial advisor with Laguna Wealth Advisors. For those of you who I've met before, and for those of you I've built a relationship with, thank you so much for joining me again and for allowing me to share some further information with you when it comes to finances, retirement, investments, and so on. For those of you who are new, welcome. It's a pleasure to meet you. My name is Isaiah Rial, financial advisor with Laguna Wealth Advisors, as I mentioned. I have my own firm, Laguna Wealth Advisors, and I specialize in retirement and retirement planning. So we manage 300 plus families. We manage over $75 million in assets for clients. And so we've seen a wide spectrum of different experiences, different circumstances when it comes to people's monies, when it comes to the mind, what are we thinking when it comes to money, and everything in between. And so in this webinar, the next 20 to 25 minutes, I want to share with you more so an add-on to extend what we talked about last time when we met in person up there in Fresno 6 to 7 weeks back. For those of you who are new, when I went up to Fresno a few weeks back, and I'm going to be back up there in the month of October, we talked about 5 different areas to help protect ourselves and grow our monies for ourselves. We talked about areas of retirement planning. We talked about insurance. We talked about estate planning, tax planning, and investments. I share with you different tools that we can use, different things we can use as a resource to help us build, help us protect the monies that we have. Well, today I want to share with you, highlight 4 of those areas. I'm taking out tax planning today, so I'm not going to be talking about that. But getting to thinking about what we talked about when we met 6 or 7 weeks back, and then also talking with clients of mine, talking with prospective clients of mine, I need to elaborate further. There's a couple other things that I need to share with you that I think can help you when it comes in those areas. So I'm going to talk about that for a few minutes. In retirement planning, I'm going to talk about estate planning, insurance planning, and also 2 investments. And then to recap that, I'm going to lead into giving you a market update. So I usually give these market updates to my clients. I share with them what I see is happening in the markets and things they should be thinking about, and really funneling the information down so that, what is really important to you, what may pertain to you, and what you should be aware of. So in the next 20, 25 minutes, I'll be talking about that. Without further ado, let's get started. So last time I talked about retirement planning. I talked about setting a foundation for ourselves, a bedrock. And how do we do that? Well, I shared with you the way in which to build that foundation for ourselves was, number 1, calculating how much we have saved in our retirement. So in our retirement accounts, 401ks, IRAs, whatever those may be. And then again, as a recap, I reminded you to multiply that figure by 0.05. Because of course, we've worked our whole lives to save these monies. Once we retire, we want to spend those monies. And so people say, the professionals say, if we withdraw between 4 to 6% from our account per year, the odds of that money lasting our lifetime is very, very high. So in this example, I share with you again, add up all the money we have saved in our retirement accounts, multiply that by 0.05. That's going to be a 5% withdrawal rate. And then divide that by 12. I want you to find out what that number is going to be on a monthly basis for you. Once you have that number, add in all the extra incomes you may have in retirement, Social Security, pension, rental property, maybe you have a part-time business or a part-time job. Add those in. What's that number? And then as a recap, I told you, find out what we're going to have in expenses when it comes to retirement. I got a little bit of a crack of when it came to that. We met in person. But that's what I want to lead in today, is the expenses. I've spoken with some of you as a follow-up from our workshop. I've met with countless people since we met, looking for my help to help them plan for their retirements. Or maybe if they're already retired and I've been helping them manage their investments and lifestyle while they're already retired. My friends, the expenses are huge. We need to know how much we have in expenses. And it doesn't matter if we're already retired. It doesn't have to be. But I highly encourage you, that's what I want to highlight in the retirement section tonight, Know your expenses. A lot of us know, yeah, I pay this amount for cable, I pay this amount for health, I pay this amount for my car insurance, I pay this amount for my health insurance. So yeah, that's what I pay for. But we don't know the total amount. We don't know every single thing because maybe we go to CVS, maybe we go to Target, maybe we go to the pick and save down the street and buy a few gizmos and gadgets sometimes. We need to add that into our expenses. And so I need to highlight that this time around is I highly encourage you, find out what your expenses are now, and also to see, is that going to change once you retire, yes or no? So I want to highlight that for you again. Moving further, insurance planning. So last time we met, I shared with you two different ways in which we can use insurance planning. We can use it, number one, as a way to pay for our debts, pay for our liabilities upon our passing. If we have an outstanding mortgage, we have credit cards, loans, whatever those may be, any outstanding liabilities, get enough insurance coverage that matches up to what we have in debt. Because if we were to pass away, knock on wood, I don't want our family, or I don't want our loved ones, I don't want your family and friends trying to scrounge and save to see how are we going to get these monies to pay for this debt. That's where insurance can come into play. And that's the first option, is you can use insurance as a tool to be able to protect you, protect your family, so that upon your passing, that insurance will pay for any outstanding debts that we may have. The second option I shared with you that you can use for insurance planning is more of a legacy play. It's more of a tool. You can use insurance as a way to pass on wealth to the next generation. So if we feel that we don't have enough money saved for retirement, that maybe perhaps we're going to use most of that for ourselves, another alternative that you can use is life insurance. Get a life insurance policy, and the purpose, the intent of that policy is to be able to pass on those monies to our loved ones upon our passing. That's another option. So those were the two that I talked about. However, there's a third. And after talking to some of you, from meeting you in person, and this is specifically for you folks, there's another alternative that we can use for insurance planning. And it's going to be this. If we take care of minors on a regular basis, so if we have kids that are below the age of 18, we take care of grandkids. So that means they rely on us. They rely on the money that we have. We feed them. We keep a shelter over their head. We put clothes on them. If they rely on us, so again, any minors, children, grandchildren, nieces, nephews, maybe perhaps family friends, insurance can be a tool for that too as well. After talking to you, I think it may relate to some of you. Here's how it works. Most likely, as these minors rely on our income, so whatever we bring home, they rely on us to, feed them, put a roof over their head, clothe them, get some toys, entertainment too as well. Let me ask you this question. If you were to pass away, if you were to get hit by the proverbial bus today, where would that money come from? The money that these children relied on for their livelihood, who would pay for that? If we have a plan, fantastic. If we don't have a plan, that's where insurance can come in. Where I suggest to you is this. Find out what our annual income is. And also, too, find out how many years do I have until this individual, this minor, is a legal adult at the age of 18. So let me give you an example. If we make, and to make it easy numbers, if we make $100,000 and the minor that we take care of is 10 years old, we have 8 years until that individual is 18. Well, I would suggest you to get an insurance policy for $100,000, multiply that by 8. The reason I say this is because that's how much our annual income is. That's how much this minor relies on us. And there's 8 more years until that individual is a minor. So we would need an $800,000 life insurance policy in case we were to get hit by the proverbial bus, that money would pay for our minor, would pay for our children, would pay for our grandchildren's lifestyle up until they become an adult. And at that point, we hope that they have a job, they're working, they can get some footing underneath them to be able to live life, to be able to thrive. And so I wanted to share that with you as a highlight. That's another tool that we can use at our disposal when it comes to insurance planning. If you have any questions on that, please feel free to give me a call. My number is 949-543-0960. or you can email me at Isaiah, ISAIAH, at Laguna, LAGUNA, wealth, WEALTH.com. So any questions, please ask. The third thing I want to talk about is estate planning. I had an individual ask me this a couple weeks back. Isaiah, does everyone need to have an estate plan? My question was, yes, absolutely everyone needs to have an estate plan. I don't care who you are. You should have some type of estate plan. So how do we make that plan? What steps or what items do we need to create an estate plan for ourselves? Here's the 3 things I suggest that you have for yourself. And again, full disclosure, I am not an estate attorney. I'm not an attorney. So when it comes to these areas, please consult an attorney. If you would like my recommendation, I do have a couple people that I partner with. I'd be more than happy to get them in touch with yourself. I'm sharing with you my experiences of helping my own clients, and from just experiences in general, I'm sharing these with you. There's 3 things I suggest we have for an estate plan. The first is this: we need to have some type of trust or will. Both of these are legal documents stipulating how we want our life's work, how we want our assets passed on to our loved ones, exactly to the terms that we want, and in the most tax efficient way as possible. If we own property, most likely we should be looking at probably a trust for our documents. Reason being is trusts are able to hold the hard asset, the hard property in there, so that it doesn't have to go to probate where the state and the government decides who gets that house. I'm sure you don't want that. You want to be able to stipulate who gets that house and when. That's where a trust comes into play. If we don't have an asset, if we don't have property and like that, perhaps a will could be an option for us. So that's the first thing we need for an estate plan. The second thing we need is a healthcare directive. Doesn't matter who we are. Even our adult children should have a healthcare directive. Let me share this story with you. First, let me get a drink of tea here. So I had a client, still a client, but this happened a couple years back. He has what he calls a wife, and both of them call each other husband and wife. They are not legally married. They have never been legally married. She went in for a procedure 2 years ago, and he, of course, he loves her. That's his significant other. Asked the doctor, what's happening? Can I help, or do you have any questions? The doctor could not share anything because they weren't legally married. And there was no documents in place. There was no healthcare directive stipulating that woman allowed him, my client, to be able to hear or talk on her behalf. And it was a darn shame. And it was a really bad time. And so I share that story because all of you, I highly suggest, should have some type of healthcare directive. And what that is a legal document stipulating if we were to get injured, if we were incapacitated, who would speak on our behalf if we had life support on us, or if we were terribly injured? Who do we give authorization to be able to talk on our behalf, to decide our motives, to decide our next steps if we were to get hurt or sick? That's what a healthcare directive is. I highly suggest all of us should have one. Regardless if we're married or not, we should have one. The third thing I want to talk about is what we should have for an estate plan is, I lost my train of thought, is a power of attorney. Power of attorney is a legal document stipulating who can speak on our behalf for legal items or financial items. We should have someone we trust. It could be a spouse, it could be a brother, sister, family member, friend, whoever that may be, whoever you trust. We should stipulate that in a power of attorney. So it allows them to speak on your behalf for any important legal or financial matter. So those are the 3 items I suggest to make up. We need a trust or a will. We need a healthcare directive, and we need a power of attorney. Those are the 3 things I want to highlight to you when it comes to estate planning. And then the last portion, investments, and then I'll lead into my market update for you. Investments is this. A lot has happened since we met 6 to 7 weeks ago, especially the past couple of weeks. So investments right now, as a recap, I have a 4-step checklist that I use to decide how I manage my clients' monies, how I manage my own monies. And the steps are this. The first is the investment I'm taking a look at So any given investment, the investment I'm taking a look at, is it in a buy signal, yes or no? The reason I say that is because I want this investment to give me a vote of confidence. It's a healthy investment. Other people are buying it. It's moving in the right track if it's in a buy signal. That's the first thing I ask myself. If this investment is in a buy signal, the second thing I ask myself is this investment moving in a positive trend or is it moving in a negative trend? Again, I don't want to be investing any of my clients' monies, any of your monies, in a negative trend. I want the most odds in our favor. And the thing is, these trends don't change one day from the next. They don't change 1 week from the next. They set that for periods of time, quite long periods of time most of the time. And so I need another vote of confidence. Not only is this investment a buy signal, but is this investment going higher? Yes or no? If it is, then I move on to the third question. And this is where a little bit of our investment philosophy comes in, is I focus on sectors. I invest my clients' monies based off of sector investments. Typically, there's about 11 major sectors in the stock market. I focus on the top 3 to 4 of them at any given time. Right now, those sectors are the strongest ones, are technology, utilities, industrials, and telecommunications, internet communications. Those are, again, the big phone companies, and also to Amazon, Google, Facebook, Apple, those type of guys. More so talking about 5G. That's what we're talking about. And so those are the 4 areas. And then, of course, there's healthcare in there too as well, but down the road. But then that's the third thing, is I want to look at the strongest sectors in there. And then number 4 is I want to stack the most odds in my clients' favors. I want to stack the most odds in with my own money. Not only do I want an investment in the buy signal and a positive trend and in one of the strongest sectors, I want that investment to be one of the best investments within those strongest sectors. So I have the softwares, I have the capabilities to find that out. If you'd like my help with that, I'd be more than happy to just share that with you. If you'd like my help to invest money, I'd be more than happy to help you. But that's the 4-step checklist that I use. Is the investment in a buy signal? Is it in a positive trend? Is it in one of the strongest sectors? And is it one of the top investments within those strongest sectors? So that leads me into this next piece, is the computers are telling us now to start putting monies into defensive investments. So let me explain what those are. Defensive investments are typically sectors or investments that typically do well when the markets are up and down, or when we're coming into a recession. So let's talk about that. That's going to lead into this market update. And actually, before I start, let me give you some examples of defensive investments. Utilities is a defensive investment. Whether markets are good or bad, we need to keep our oil, our natural gas on to cook. We need to keep our lights on so that we can see. We need those type of things. Industrials, which is aerospace companies, that is a defensive investment. Whether markets are good or bad, the government's still going to give contracts to these aerospace companies. And healthcare is a defensive investment, as well as technology is becoming a defensive investment, because we all need to get our software updates. We all want our cybersecurities, whether markets are good or bad. We all need those updates for our computers and technology. That's becoming more of a staple for us. We can't live without it. And also, too, it protects all of our information, so we definitely can't live without it. So those are some examples of defensive investments. So let me lead into this, and I'll be done the next few minutes with this webinar. But the market update. So what's happened since we did our market update? If you bear with me, I'm pulling this up on my screen, so it looks like I'm moving here. Here's what's happening. So as of this week, markets are up about, S&P's up about 21% so far this year. The Dow Jones is up about 17% this year. And the NASDAQ, which is large technology companies, they're up about 24, 25% this year. So it's been pretty good. Very good, in fact. But here's things that's been happening here. The Federal Reserve cut interest rates recently. So let's talk about that. I also want to bring up to attention that Iran just bombed Saudi Arabia's oil supply about a week ago. So that's important in the news. And then this recent news that just came out, this impeachment talk over there happening in Capitol Hill and in Washington, D.C. So I want to talk about that briefly. So let's talk about the Fed. I had a client ask me the other day, Isaiah, the Federal Reserve cut interest rates. So number one, what does that mean to me? What does that mean to the economy? And what does that mean for Trump? Because I see that he's pushing it. Why? What does that mean? So what it means to you, and actually let's do two in one. What it means to you, what it means to the economy. The Federal Reserve decides when to raise and cut interest rates. They have this tool, and they have the tool of being able to cut interest rates at any time. The reason they usually cut interest rates is because they want the economy to continue to grow. They want this economy to expand. So that's one way they can do it. What that means to you, what that means to me, is that mortgage rates are going to be lower. Refinancing loans are going to be lower. Buying a new car, the loan for that's going to be lower. Credit cards are going to be lower. Borrowing is going to be lower. They want us to spend. They want us to spend more money so the economy continues to grow. That's why the Federal Reserve cuts rates, because they want us, the consumers, you and me, to be able to spend more monies. That's what it means to the economy, that the economy will continue to move forward. What it means for us typically is when they cut interest rates. Short term, very good for the stock market. Stock market does very well, typically, historically speaking, when the interest rates go down. Long term, though, it's the first sign of a recession. And there's no timing when that's going to happen, but nonetheless, that's the first sign of a recession to come. So what can we do to help protect ourselves with this recession? What I suggest to you is put monies into defensive investments. Again, utilities, technology, healthcare, also to aerospace companies. Those are some thoughts. Or putting monies into money market funds or cash for the time being. So when stocks come down or when investments come down, that's where you could take the opportunity to put monies to work, invest in these investments at a cheaper price. Those are a couple thoughts. And lastly, what does this mean to Trump? Why is Trump pushing this so much? The reason why he's pushing it so much is because election season's coming up. And he wants a strong economy. He wants this in his back pocket to say when the elections and the debates come, hey, America, guess what? I have a strong economy. With the lowering of the interest rates, I boosted our economy. The economy is doing fantastic. Please re-elect me. That's why he's pushing it so much, because he wants to use it as more of a marketing tool when it comes to election season again. So that's why. So that's what's happening with the Federal Reserve interest rates. Let's talk briefly, just quickly, about Iran bombing Saudi Arabia's oil supply. The major thing to know there is that America, us, and actually a lot of the major countries around the world have to protect Saudi Arabia. So there may be some type of counterattack, some type of invasion, perhaps some type of war to come up in the future, because this is not a joking matter. Iran just didn't do it by accident. They did it on purpose with intent. So there has to be repercussions for that. So to help us, and what that means to us is, again, looking to see maybe it's time to put money into defensive investments. Now you're starting to see a little bit of a pattern here. And specifically, perhaps industrials, which is aerospace companies. Do you think if we go to war, if there's an attack, do you think that these aerospace companies are going to be busy? Heck yeah, they're going to be busy. They're going to be extremely busy. So that means their stock, their investments may go higher. Of course, no one knows, but odds are it goes higher. So that could be a thought there. Just want to bring that into attention. Not too much to be concerned about right now, but hey, there may be some type of counter-attack response here in the near-term future. So we'll keep an eye out. And the last thing I want to talk about is this impeachment stuff. So what's happening? What does it mean for us? What does it mean that the stock market, is it good or bad? So Nancy Pelosi came out, or I guess just take a step back. There was transcripts that came out saying Trump was talking to the Ukrainian president to try to get some dirt on the Vice President Joe Biden, or previous Vice President Joe Biden, who's looking to run for president. Trump was trying to get some dirt on him so he can use for election season. Well, those transcripts came out, weren't too good. On top of that, too, a whistleblower came out talking about transcripts of them hiding what was said in those conversations so that no one can find them, because most likely it seemed like they knew it wasn't the best of conversations. Not a very good thing. So Nancy Pelosi, Speaker of the House, came out the other day saying they're going to look to do an impeachment inquiry, meaning that they're going to look to see if there's any right to try to impeach the president. So this is not the first. This is not the last. This is not the first time we've heard about impeachment for Trump. And what are some things we do know? So let's not react. Let's respond. how can we respond? Number one is, let's take a step back. What's happened in the past? They've talked about impeachment, but nothing's happened. And we also, too, we know that these things don't take days. These things don't take weeks or perhaps months. These things take quite a bit of time. So for an impeachment hearing to start, it has to go through the House. It has to go through the Senate. It has to get through a lot of phases for us to get there. So I would suggest to you, don't panic. And also, too, don't overreact. Let's take it one step at a time to see. And again, I'm not one for politics, so I'm not left, I'm not right. I guess you can say I'm independent, but nonetheless, I don't have one favoritism or the other. For you, let's take a step back. What does this mean to us? Well, it means that, hey, we should just observe what's happening right now. If something were to happen, if impeachment hearings were to happen, I'm assuming stock markets may be up and down. There may be some volatility in the market. So again, what can we do there? I would give you just a couple suggestions, of course. Talk to a financial professional. If you want to talk to me about it, I'm here for you. If you want to talk to someone else, please go for it. You can put money into defensive investments because those typically do very well when markets are volatile. Again, that's technology, that's utilities, aerospace companies, healthcare, those types of people. We can leave monies in cash or put them into bonds, money market funds to help us get a little bit of growth when markets are up and down. Or we can wait. We can leave monies in cash or hold our investments so that, hey, if there's a downtrend in the stock market, we can take advantage of that and we can buy investments for ourselves. And so the impeachment inquiry, it's just that it's initial right now. So let's just take a step back. Let's observe. Let's see what happens. If anything major happens, then I'll share with you some thoughts and we'll move further from there. But let's just take it one step at a time and see what happens there. So my friends, that's what I wanted to share with you right now. With just highlights from us talking last time we met in person, giving you a market update. I am going to be out there in October, it looks like. So I'll keep you posted with giving you the details and information for that. I'm going to be talking more specifically about ways to help us prepare for 2020, the new year coming up, things that we can be looking at to doing now to get us ahead and on track for the upcoming year. And also, too, I believe we're going to be talking to business owners, too, as well, because there's quite a few options they have at their disposal to help them with their finances. So if you're a business owner, please stay in touch, or I'll stay in touch with you, and I'll give you those details. If you have any questions, if you want to get in contact with me, again, my information, my phone number, 949-543-0640. My office, I'm located in Newport Beach, California, so at Southern California, about 30, 40 miles south of Los Angeles, about 75 miles north of San Diego, if that makes any sense. My email, if you want to email me, Isaiah, ISAIAH, at Laguna, LAGUNA, wealth, 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 WEALTH.com. So Isaiah at lagunawealth.com. If you have any questions, if you have any thoughts, please feel free to give me a call, email me, reach out. I'm always here as a resource. If you'd like to set up a consultation, a private one-on-one phone conversation, I'm here for you. There's no attachments, no fees, no nothing. I'm very transparent. I'm here to help you first and to show you and share with you the resources and the sounding board that I can be for you. I need to show to you first I can help you before you decide to do any business with me. So I want to be very transparent up front with you. So if you have any questions, please feel free to give me a call. I look forward to talking to you soon. Thank you so much. Have a great evening and take care. I'll talk to you soon. Bye-bye.